Thank you very much. And again, thank you for your interest in our company. My name is Erik Danemar. I'm the Group CFO and Head of Investor Relations for Ferronordic. I'd like to start with providing an overview of what we are and what we do. We are the exclusive dealer for Volvo construction equipment in Russia and Kazakhstan. Volvo construction equipment has a very strong brand image in Russia, an image of high quality and operational excellence. And it is around that brand that we have built our organization and our business. We have since then broadened our product portfolio, as you can see on the slide here. We've taken on Terex trucks in 2014. That was actually acquired by Volvo in 2014, the rigid hauler part. So that fills an important part in our product offering for the mining industry especially. We also have Dresta bulldozers. Dresta is a Polish brand. We have Rotne, which is a Småland company, very good forestry equipment, and forestry, of course, a very big business in Russia. Mechalak produces backhoe loaders. That's a UK company, which we started distributing in 2017, and then again in 19 in Kazakhstan as well. We do new equipment and also used construction equipment, and we do very important, which we refer to as aftermarket. That is spare part and services to our clients. This is extremely important. Without a credible aftermarket offering of service and spare parts, it's very hard to sell new machines. And of course, without selling new machines, there is no aftermarket. So these activities feed each other. Speaking of aftermarket, we are also aftermarket dealer in 10 locations in Russia for Volvo trucks and Renault. That's only aftermarket, so we don't do new trucks in Russia. Dealer for Volvo Penta in parts of Russia. We are in process of constructing a remanufacturing center. I'll get back to that later in the presentation. And we also have a growing business which we refer to as contracting services. I'll say a few more on that later as well. We find this segment very exciting. We were listed on Nasdaq in 2017, so we've been public since then, and our free float is about 60%. Very highlights of our development to your top right there. When the company started in 2010, there was 160 employees. We're now 1,150. There were 6 outlets in Russia, and we now have 84 in Russia and Kazakhstan. And that presence, that footprint, and those people have allowed us to grow our revenue by more than threefold, as you can see on the slide there. An overview of our clients, the customers we serve. You'll see that about 1/5 is mining, about 1/5 is road construction, another 1/5 is forestry, and then we have about 1/4, which is general construction in the urban segment, and then you also have oil and gas and quarries and aggregates. Looking at that client mix, one thing I typically stress here is that if you look at mining, forestry, and oil and gas, those are all industries that actually feel extremely well when there is weakness in the Russian currency. They have hard currency revenues from their sales, while their cost base is in rubles. So from ruble volatility, that provides some balance. Road construction, on the other hand, is much driven by government invested, and therefore tends to, when the economy is weak, that's when the government tries to stimulate the economy by investment in infrastructure. A few words about Russia. That's our main market. Again, since the beginning of this year, we're also dealer for Volvo and Mechalak in Kazakhstan. But Russia is our main market. 144 million people. That's about 3 times Canada. The biggest country in the world, about twice the size of Canada. The world's biggest forest land, about 1/5 of all forest assets or resources in the world. Very rich in oil and minerals, and that does drive, to a large extent, the structure of the economy. So around 50% of budget revenue still relates to oil and gas. Maybe less well known is that Russia actually has a very strong balance sheet, as you can see, more than $500 billion in international hard currency reserves and more than 100 billion in gold reserves, and a debt to GDP, government debt to GDP of below 12%, which is on an international basis, of course, quite a low level. The economy has recovered from the dip following the tensions in Crimea, as you can see to the right there, and is now growing between 1% and 2%, so no extremely high levels, but still growing as we see it, and forecast that to continue going forward. One aspect of the Russian economic structure is what we would characterize as an underdeveloped infrastructure sector. In a global competitiveness report from 2018, Russia was ranked 104 out of 140 countries globally, Kazakhstan on the 106th place. So behind several less developed economies in Africa included. The Russian government knows this, and in May 2018, the administration and the government approved 200 infrastructure projects in a larger investment project that also included education and healthcare and so on and so forth, but 200 infrastructure-related projects with a cumulative investment requirement of more than $100 billion. This is something that we expect to come into fruition gradually and have a positive impact on our industry and client base. But we haven't seen much of that realized yet, and again, it's something that we expect to see going forward. Looking at our addressable market, you can see that here. I should stress here that this number of machines annually in Russia, our addressable market, this does not include Chinese equipment, and it doesn't include Russian equipment. Russian is actually very small. China would add about well, slightly less than a third to this, but we're not really competing with Chinese equipment. They are in other segments than we are, and that's why we show the market in this way here. So what can we take away from this slide here? One thing is that the market has been volatile. We see the impact from the Lehman crisis in 2008, when the market contracted very sharply. But we can also see that it's quite actually an immature market. Russian market for high quality construction equipment really only started in 2006. It took off, again, was interrupted by that global financial crisis. It recovered, and then you had again the tensions around Crimea, which pulled the market down again, and we have been recovering since. Where do we expect this market to be? As a reference point, we have estimates that Canada in 2018, I've used Canada as a benchmark, was about 50% higher than Russia, and that's again with 1/3 of the population and half of the land area. And as we would say, importantly, less demand for investment in infrastructure, which again is important for our sales activity. In addition to that, as we label this slide, we look at something we call pent-up demand. The peak year of 2012, the machines that were bought then, they're not in the population anymore. They have gone further in the ecosystem of these machines, but they need to be replaced. So we believe that there is a huge demand just to replace also the population in Russia from what it was. So therefore, on a longer term basis, we're quite optimistic on the market potential in Russia. How are we trying to capitalize on the opportunity in Russia and Kazakhstan? Well, we want to be the leaders in construction equipment, in providing the product, and importantly, servicing, delivering value add to our clients and customers. Our direction for achieving that, geographic expansion, that's within Russia, but also looking wider around in the former Soviet Union countries, but also beyond that point. Expansion into related business areas, that's different product, but also different service solutions to clients. Closer integration with clients is something that we're constantly working on and thinking on. How can we add more value? How can we deliver more surplus to our clients? Aftermarket absorption of at least one. This measures how much of our fixed costs are covered not by new sales, so by the aftermarket revenues we have. So it's some measure of the resilience of the business to a downturn when the new market contracts. And speaking then about how we have achieved these targets over the time of our existence. The company was founded in 2010. As I said, it had 6 outlets then. These were in the northwest and central parts of Russia, and now we are at 84. I cannot stress enough the importance of having the local presence to be able to service the machine. When our clients, especially in the mining industry, where these machines should be working 24/7 basically, the cost of a machine is not always biggest from the initial price or the diesel or the operators, but the biggest cost can often be the standstill or the risk of standstill. These machines should work all the time, and that's why we need to be close, and we need to have the spare parts, and we need to be able to service these clients 24/7. And that's what we do with having this presence. Again, Kazakhstan opened quite recently, and we currently have 4 registered points there and a few more mobile points to service the Volvo population there and the Mecalac population. Product range, moving from the geographic expansion, looking at products. I mentioned this in the start. Here you get a sense also Volvo construction equipment, if you see down there, make up about 3/4 of our revenue. The other brands about 1/5, and the balance being other revenue. Which I'll mention as well. So Volvo construction equipment, trucks, as I mentioned, aftermarket only at 10 locations. We do mobile generation for customers that need that. We have Terex trucks with the rigid haulers, dressed up bulldozers, forestry equipment for that big market from Rotne in Småland, and then Mecalac backhoe loaders, more serving the urban segment there. Few extra words on trucks. As I say, we do aftermarket, so service and parts, 10 locations. I want to mention it extra because we think this is a very exciting potential and opportunity for us to grow. There is only so much extra we need to do to equip our service points to service this segment as well. So it is a way to increase capacity utilization of our service points, but it's also a way to service our clients better. The trucks customers are not only similar to our construction equipment customers, they're actually the same a lot of times. There's a big overlap between the two, so we can really achieve synergies by serving both segments there. In the first quarter of this year, we started also used trucks. So we buy, we refurbish, and then we resell trucks. It's a small, very small part of our revenue at this point, but we see meaningful growth potential there as well from the big population that is installed in Russia. That's mainly, of course, Volvo and Renault trucks that we have been dealing with so far. I mentioned also constantly getting closer and achieving closer integration with our clients. Machine sales down to your bottom left there is the first starting point. Then we have the aftermarket, but we also try to work constantly on consulting services, business services, and in any way trying to deliver more value to clients. I'll say a few words about that. Starting with the aftermarket, it makes up about 25% of our revenue. It has some cyclicality to it. It's typically higher in the first quarter when there is less new machine sales and the market focuses on repairing and maintaining the current fleets. I mentioned already, it's very important to have that credible aftermarket presence for the clients to drive the initial sales as well. And drivers for this piece of our revenue is, of course, having a machine population in place, but having the regional footprint to be there, having the spare parts availability when they're needed, and then, of course, training experience, which is a very big part of our internal development program every year for our mechanics and the rest of the organization as well. And, of course, having those relationships, knowing the clients also, what they do when they do it, etc. Something that we're quite proud of that we have developed in-house is a digitalization project. Equipment that we sell, new construction equipment, are equipped with Telematics System. Telematics are part of Internet of Things, you could say. They send signals about the performance of the equipment out in the field. It may be the load factor, it may be how many kilometers, fuel level, if an oil filter breaks. These signals go to a data center where we have an algorithm rules engine that processes them depending on the sequencing, depending on what combination they are, etc. They then produce sales leads to our new salespeople and to our service people, mechanics. They get these on their mobile phones or on their tablet computers, and they reach out to customers. This rules engine is then constantly refined and improved. We learn from the experience, did this work, was it applicable, was it useful for the client, and we fine-tune it all the time. So this has become a very valuable tool for us to drive both new but especially aftermarket sales. I mentioned contracting services. This is something that we started with a few years ago. It's quite common in the rest of the world, but not so developed in Russia, especially in the remote areas. This is where a client doesn't buy a machine from us or ask us to train their operator or buy spare parts from us. They pay us to deliver 1 cubic meter of earth or rock from one place to another. So they pay us per cubic meter of rock moved. We have the machine on our balance sheet. We have the operators. We provide the service and the maintenance of the machines and manage the fuel logistics in cooperation with the client. This is not only a very interesting segment for us from a profitability point of view, but it's also a very valuable learning experience for us, understanding what our clients need, when they need it, and how they need it. So something that we're quite excited about as well. I mentioned a remanufacturing center, so we are investing in a remanufacturing plant in Yekaterinburg, which is Russia is a huge country, but it's as central almost you can get in Russia, and that's why we put it there, due to logistics. So with this remanufacturing center, we will buy from our clients engines and transmissions. We can buy other parts as well and whole machines, but that's the core from Volvo engines and Renault. We will refurbish them and then resell them either to the same client or to another client and replace the initial one with a new engine. They will then come with a Ferronordic warranty, or if they're part over our bigger Volvo certified rebuild, a guarantee aligned with that program. Initial investment of 35 million. We expect some negative impact on margins in the next year and on cash flows, but then this to contribute really in 2021. Again, this is also a way to get closer to our clients, to offer them bigger optionality on how to manage and maintain their machine fleet. Also, I would mention from a ESG point of view, it's another way to recycle the equipment to make sure that what is out there can be sustained longer. Something about our results to date. I think this graph is quite illustrative. The light pink line there shows the market. So this goes back to the slide that we had in the beginning, where I showed the market going up and down. And as you can see, again, following the tensions in Crimea, we had a very sharp drop in the market. The market was down 81% from the start of the business, and yet our revenues were down 39% and our operating profit by only 8%. Now, one important reason, one explanatory factor to this is that absorption ratio that I spoke about, and the fact that when the initial market cools down and there are less new sales, clients need to do more maintenance and more servicing of their machines, and that's a segment that has higher margin in the market and higher margins for us. So that's one of the factors that point to some resilience. We are in a cyclical business, there is no denying in that, but we do have some resilience in through the cycles as well. If we look at where we are now, we're still only 58% of where the market was, and as I said in the graph on the market, we believe that there is quite somewhere to go, both to get to a normal level in the market, the potential for from the infrastructure investments, but also this pent-up demand, because we believe that there has been underinvestment in high-quality machinery for some time in Russia, and Russia needs to catch up on that. Market at 58%, our revenue at 150, and operating margin at 339 versus where we started, supported both by growing revenues, but also growth in that higher margin aftermarket and the growth in the contracting services businesses as well. If we put those percentages in numbers, we can see that from 2016 to last 12 months, including the second quarter of this year, we'll see that we more than doubled our revenue, 219% to be precise, and almost tripled operating profit, and have improved our operating margin there, as you can see as well, up to 8.8% over the last 12 months of the business. Return on capital employed is a measure that we try to always consider when we evaluate new investments. We achieved an increase in return on capital employed from the end of 2014 during our consolidation period there, when we improved our own efficiency, up until mid-2017, where it stabilized. We've had a decline in the first half of this year, still at high level, we think. That's partly due to a build-up in working capital that we saw in the first half of this year, but also some accounting effect from IFRS 16, which require us to treat operating leases as financial leases. So that's been a change from the start of this year. Very briefly on the second quarter, we were quite proud to announce that we had our biggest revenue and best results ever to date. We grew our sales by 35%, and that was in a market that in unit terms grew by around 5%. So we did take some market share. That 35% includes aftermarket and contracting services as well, but we did see a market share improvement as well. Operating profit grew by 44%, and operating margin stood at 8.9%. That operating margin was supported by growth in contracting services. Very briefly on the income statement, we saw equipment sales as part of the 35% growth in revenue, 31% growth in equipment. Aftermarket grew by 13%, and other revenue by more than 3 times. That includes that contracting services part, which in itself made up 8.5% of total revenue in the second quarter. That is, other revenue made up that part. Gross margin was supported again by aftermarket and growth in contracting services. SG&A increased in absolute terms, but against growth in revenue, it declined as a percentage of revenue. And those two put together, higher gross margin and lower SG&A as a percentage of sales, boosted the operating margin and helped us to grow the operating profit by 44%. We did see higher net interest expense on the back of a higher debt, and as a net result, net income was up by 34%. If we look at cash flows, as I mentioned, we did see a build-up of operating capital in the first half of this year. Three factors that I would mention behind the inventory that remained at relatively high levels in the second quarter, similar to the levels in the first quarter. There is a seasonal factor, as we can see also from last year, but it doesn't explain the whole picture. There were certain segments that performed less well than we thought. We mentioned in our second quarter report the road segment, where government disbursements of funds from the budget were delayed, and therefore our clients could not place the orders we had expected with us. So that was another factor. There is also a factor from us taking over importation of equipment from Volvo, which will have effect in terms of driving up our inventories. That should over time have no impact on our working capital, but over the transition period it will have some negative impact on working capital. Investments, we are an asset-light business. We own only 2 of our outlets in Russia. The growth that you can see over the last 12 months is mainly driven by the contracting services, so where we own our own machines, so we make capex investment in those machines that we keep on our balance sheet. The effect of working capital investment, but also the dividend, 109 million Swedish crowns that we paid in May of this year, resulted in the movement from a net cash position to a net debt position. Still, versus last 12 months EBITDA, we stand at 1.1 time, which is well within our financial targets for debt over the cycle. Finishing off on those financial objectives, maybe starting from the end, I mentioned net debt to EBITDA. We have a objective of staying between 0 and 2, and again we're currently at 1.1, so well within the range. Operating margin moving upwards here, 8.8 over the last 12 months, also at the well within the range, and actually at the upper end of the range. And with regards to our objective of tripling revenue, 2016 revenues by 2021, well, we are at more than 2 times now, 219%, so on track there to also grow revenues towards our objective. So with that, thank you very much.
Okay, thank you, Erik. We have time for a few questions. Could you go back just one slide?
Yes.
Or we could keep that there, sorry. Which are your main competitors, and what is your market share?
So our main competitors are Komatsu and Caterpillar. Those are the key competitors. You can sort of look beyond. Hitachi comes lower, but those are really the key ones that produce high quality equipment that we believe are close to our standards, so to say. We compete with them also on the service. That's a very important part, and there are more discrepancies in terms of regions and performance, we would say, as well. In terms of market share, it depends a lot on what segment you are looking at. There are a lot of sub-segments. In contrast to trucks, where you have maybe 4 main models, in construction equipment, you cannot substitute a wheel loader with an excavator. So you need to look sort of on a sub-segment level. But somewhere around 10% for the overall, if we would break it down like that.
I mean, you had approximately 11,000 units.
Yeah.
I mean, you're obviously counting units in some way.
Yeah.
So okay, so you have approximately 10%.
If you look at it on that basis, it would be a little bit lower. We had 842 units, or sorry, slightly over 900 in 2018.
Okay. And Komatsu and Caterpillar, they are bigger?
They are similar,
okay.
But I don't have their precise numbers.
Yeah. And are they organized like you are, with a sort of independent dealer network, or do they have wholly owned subsidiaries? Or
they also operate through dealers like ourselves.
Okay.
We have exclusivity for the whole of Russia. They have sometimes divided it between different regions, different dealers, where they feel one dealer is stronger than the other.
And why is domestic manufacturers so weak? Did they all go bust in the 90s, or?
I think that there was never a strong tradition of high quality production in Russia. You had the Belarusian brand Belaz, which sold a lot of quantities, among them the big rigids. But I think as the market develops, customers starts, as we would like them to look more at what we call total cost of ownership. So that's the cost over the lifetime of a machine, where the initial purchase price maybe makes up something like 20%, the rest being service and maintenance, diesel, operator costs, and then there is also a recycling value at the end of it. So as the more customers get used to looking at that, the initial price becomes less important and the total more important.
But if you have had 11,000 units in your segment, how much would the total be, including Chinese and domestic and everything?
I don't have a precise number for you, but I would say you would add around 50% more to that, so it would be 1/3 of the total. Yeah, so 50% more.
So the premium segment is 2/3 of the total.
Yes.
Okay. That's surprising, isn't it?
Well, I mean, that's where the market is going. I think also you can take different cuts at the market. Yeah, you can expand to a wider set. Again, that's what's more complicated with construction equipment and trucks, I think, because it depends also what kind of equipment you include. Especially, I think, the light city compact equipment. If you would include that, the market would be much bigger than we have here.
And where do you see the biggest potential in the contracting service initiative or in the trucks initiative? Those are sort of two growth areas that are pretty different.
Those are two growth areas, but they're very different. I think the truck segment is somewhere where we have relatively low-hanging fruit in the sense that we could expand fairly easily. It depends a bit on also how Volvo wants to structure their operations in Russia. They're selling in Russia everywhere, and they work through other dealers as well in Russia. With regards to contracting services, there is a pacing there. We see great potential. Also long term, we think this is part of where the market is going. But there is a different capital commitment there, and we need to look at every project by project, to see that we're comfortable with the economics that we get out of it.
Very interesting, but we need to wrap it up for timing reasons. So thank you very much, Erik.